Good morning, traders. Welcome back to TradeDelicious on a Friday. It is non-farm payroll day, so manage your risk. I'm your host, Rich, joined by Alex from the 5%. It's Alex. How's your week been, sir?
It has been good, man. It's good. Excited to be on. I enjoy coming on here on Fridays and Tuesdays and joining you to trade the markets. I heard that you're going to be up in the risk today, so I'm excited to see what you do.
Yeah, we yesterday we hit 11 likes, so we're going to be trading 1.5 lots today. So yeah, we're sizing accordingly. Graham saying Rich just come back from a funeral. Absolutely not. So there's a bigger story here. If you saw yesterday's stream, you'll see that Jordan rocked up in a shirt, and Jordan got his respect. Jordan got listened to yesterday. That's all I'll say. So I was like, you know what? Rich needs his respect. So Rich is going to rock up in a shirt today and he's going to get his. But truth be told, I've dressed accordingly because jokes aside, we will be trading a little over 11 lots today. We hit a personal best yesterday on stream with over 100 likes. So we will be trading over 11 lots today. So I figured let's dress for the occasion because we might very well be saying goodbye to the account, especially with non-farm send it day coming into today. But I'm curious, anyone in chat who's already pulled the trigger today? Price action to me looks terrible, which is not what I want coming into one of the bigger trading days that we're going to have so far. But I think we'll look back at this in 3 months and we'll be like, do you remember when you were only trading with 11 lots? Do you remember when it was only 11? Because it will sort of creep up to 15, maybe 20. And truth be told, I'm looking forward to it. But caught a lovely little, I think it was a short yesterday. And you watch the market run me over today. I can almost see it's going to happen. Who we got in chat? Who's the first in chat today? It's Michael saying, happy Friday, one and all. Here's to a great stream with Rich trading 11 lots and killing the market with some massive profits. I don't feel confident today, if I'm honest. I come in yesterday a little bit too enthusiastic, and yeah, that may have backfired. Murray's in chat as well. Good morning, Musley, Evans, Graham, Arkin, Michael. Sorry, I've already said Michael. Loads of people in chat. And I want to take a moment to say thank you for putting the comments in yesterday's video. I did go back and read them today when I double checked those likes, and getting a lot of love, a lot of support on the channel as well. So I didn't see any questions. So if you've got any questions, anything you want us to talk about, we only get Alex a couple of streams a week. So if there's anything specifically you want to ask Alex, that's what he's here for, not just to show his pretty face and trade those massive sizes in the market. But,
5 of secrets.
Pick his brains, get them 5 of secrets out of him. I'm sure he'll spill the beans if you ask him nice enough. But failing that, let us know. Let us know what you're trading in the market. I'm flat at the moment. Alex, have you pulled the trigger on anything?
I'm looking to pull the trigger just on maybe a short on euro for about 10 pips, and then I'll be looking for a long later on in the day. That's what I'm looking for. Then again, it's big news day, so will I be holding through that? Probably not. But I'm halving my risk. I'm getting lower risk now, so only about $500 I'll be risking on a couple of trades because I am going for a period, a bit of drawdown. So
okay, we touched on this before the stream, and drawdown, normal. But is it a normal drawdown, or is it something that you feel maybe a little bit exotic and you might have induced yourself?
Exotic? What a word, Rich. Exotic drawdown. Like a little drawdown with a pina colada, sitting on the beach, an exotic drawdown. It's a drawdown that is mostly coming from not following process and being a little bit more impulsive in the market. What I was saying, I am an impulsive person. I trade impulsive, but when I trade impulsive, I trade it normally with a plan, and it has been very busy couple of weeks. Because of that, I've been jumping into the market without really giving it a good look. I kind of lost myself in where the market where I feel the market structure and where the market is showing me where it wants to go. But that's just normal. I wouldn't call it exotic. I'd just call it a normal drawdown for every kind of trader. You know, you go through these times, and you just got to get through these times. So these times, instead of being super aggressive, now I'm gonna have to be a little bit reserved, half my risk, because I'm getting things wrong, until I can then turn it around and get back to where I normally am. So you've got to kind of be dynamic with yourself. You've got to kind of understand where you're feeling as well.
Yeah, awesome. I like that. You said about sizing down as well, managing risk. First and foremost, we're risk managers. Unless we want to lose accounts and start all the way back again at zero, we have to manage risk. Risk keeps us in the game as well. Akash is saying, please cover liquidity topic in today's session. Yeah, we can do that. We can do that. Alex and I may read it very differently, but maybe we can get a couple of opinions on that. John Wick. Enough of that. Let's pull up the news calendar. Let's see what all the hype is about today. So just before I get onto this, do you know what I noticed on this today? Now, I don't know how long this has been here. This is the first time I've noticed this. Check out this. We've got all the central bank sitting on
that is super convenient.
I mean, if you said to me, hey, what's the dollar rate? I'd have to go and search it through here. I know it's round about 5%, but it's actually got it all listed here. And better than that, we can click on one of these and we can immediately get the graph, the next release date, and obviously the source will be Bank of England. But yeah, we can pull up all the information we need. So super convenient. Jordan was talking yesterday about a fundamental play in New Zealand USD. Haven't checked that position to see how it's running. Don't spoil it in chat. I'm gonna check that live on stream, see how it's going. But yeah, if we have fundamental ideas, if we're looking at the market from a bigger sort of, I guess, a wider lens, this is a fantastic place to come and check the interest rates at a glance. Yeah, just noticed that this morning. So today, this is the big one. This is the big one that we're looking at. We've got the non-farm employment change in the unemployment rate coming in about, I think it's 5 hours from now. So price action right now looks messy to me. It just looks messy. I can't get a read on it. I'm going to have to size up. It's part of the deal that we have here at TradeDelicious. But I will make sure that I'm flat round about 1:30. Been doing some good work, not just on this account, on other accounts in the background, and I don't want to be giving them back. And today, how many times have we gone into a Friday just feeling like a casual trading day, and we have ruined our own weekend because we have literally taken subpar trades?
Too many times. My girlfriend asked me, what's wrong with you today? Why are you feeling like that just after a Friday when you give everything back? Like, no, just tired today, babe, you know. She doesn't know you're just blowing all your profits in 2 trades because you're over leveraged.
Yeah, that's
story of a trader.
Just a click of buy and sell, and you can just give away all that hard work as well. So yeah, be careful, manage your risk today. That's the message. If I can leave you with one message, it is manage your risk. We'll do our best to manage risk on stream. Everything we do is for entertainment purposes only. Please don't copy these trades. We're happy to share and show our analysis on the stream, but you've got to take it with a pinch of salt. And that's what we want. We want traders to look at the analysis and compare that with your own analysis. It's great to lean into other people's ideas and then kind of use that to create your own ideas from. In fact, that's where a lot of my own, I guess, original ideas come from, content I've seen online and just kind of taking ideas and themes in the market. So we'll definitely cover liquidity in today's session. I think it's a fantastic tool. But what do we say we pivot into the market? What do we say we actually jump straight into the trading floor and see what's moving?
Yep. I've got a trade on at the moment.
Let's have a look. Let's see what you got cooking here.
So, if you guys have been following everything that we've been doing, you can see the account balance is slightly in drawdown at the moment. So we are being a little bit more. We've been being careful. So we got 500 risk on this particular trade. The overall idea is I do think the euro is going to go up, but before that, we've seen a lot of deeper retracements on euro, quite a bit. You see, it does move up, but then you've had these big retracements, which is something I'm not used to on euro. It's kind of a change of, I'd say, like a little bit for me, like a change of character with euro. I'm used to, you know, getting in at, let's say, a 50 fib. So my kind of trade would be something like that. You see there, it kind of retraces, continuation ups. Those are kind of the trades that I look for. My stop would always be behind these lows. We're looking at talking about liquidity. That's liquidity. You know, maybe there's not enough liquidity up into this area for price to actually go up there. So then price is coming down to find where all of those buyers is, so it can start, so the market can move. All the market is doing is going from passive orders in certain places to market participants that are entering market, and then price is moving to find those different orders. So definitely a lot of orders down here, including mine. So you can see price hasn't pushed up; it's just gone straight down. And those are the kind of trades where I've been getting caught out quite a lot. You can probably see the same kind of thing. Here. Again, I'd have the same kind of perspective as, okay, market is pushing up now. It's found support. Maybe this is the continuation up. Mm-hmm. So I've been getting quite caught out in these types of trades. In this particular trade, we do see that nice push up. I do think Euro is going up to push up, up to these highs. But before that, I do expect kind of one of those retracements down before I get long. So I have got a position in to take that short. So let me have a look on the 15-minute. Where is my chart? There you go. So we can see price, you can call this the Asian session. So you've got lows of Asian session here, low of Asian session, high, and then you see prices come down, hasn't managed to break up above, and then it's made a little bit of a low, breaking these lows here. So my idea is then price is going to come down, it's retesting this area, and it's going to come down to a better price for then it to push up. You can see that kind of candle there is a little bit of a red flag, but for this particular trade, that doesn't need to bother me too much. We'll see what happens. I'm probably about 3 pips to getting stopped out, but we'll see what price does in the next couple of minutes. If we go to the 1 minute, we'll see what's happening. So you can see that we've broken down. We're hitting this area now of resistance on the bottom of this range. And something that I talked to Rich about not so long ago is that I'm not using my return to the mean strategy on Fridays. So I'm using a break and retest strategy instead. So break, retest of these lows, and then continue down to the 15-minute EMA. That's what's going to be happening.
Alex, I've got a question for you. I was sitting there listening to you talk about that. How good are you at metaphors?
How good I am at metaphors?
Yeah. Are you good at metaphors?
Interesting question. Never really thought about that.
Okay. Let me give you a little bit of an idea here. So we were asked earlier to talk about liquidity. How many metaphors do we think we can come up with that could explain liquidity, but in a different scenario? And chat, this goes for you as well. If you've got some metaphors,
super easy, man. I got one all the time that I use. Yeah.
Go for it.
So let's say you're in the market for a chocolate bar. Okay. Now you go to the shop and there's no chocolate bars. Okay, so you come out of the shop and you see the market. You see one chocolate bar that is, now I'm thinking about it. I explain it very different actually. If you're selling a chocolate bar, okay. And I'm messing this up.
Okay. Let me jump the queue.
You go for it.
Imagine we've got a car.
I'm gonna think about
Imagine we've got a car, right? And we want some petrol. What we're going to do is we're going to go to the cheapest petrol station. And that's kind of what price does. It often runs to the cheapest petrol station and it will fill up its tank. Markets have to fill up their tank to be able to move. We can't go anywhere on an empty tank, and orders or liquidity is a fantastic way of filling that gas tank up just a little bit to put a bit of energy in the tank to move the market forward. A little bit of a weak one. I think we can do better than that. Come on, chat, get behind us on this. While Alex is still thinking about
the chocolate bar one was very, very similar. I'm just gonna how to word it better. But I do like that one. That's a really good one. That's not a weak one. That's really good. You're not gonna. But then again, there's some people that would just go in straight away at market and just buy whatever petrol that they can get their hands on because they need it right now. The same with the orders in the market. If you're kind of a passive trader and you're leaving orders, you're the type of person like, okay, I'm not going to get that petrol right there. I'm going to go and have a look for the next cheapest place. It's the same if you're selling petrol. You're going to sell it to somebody that is in need of it right now. You're not going to. There's loads of different ways to looking at it.
That's
market order business listens to what do you prefer.
You were talking about market orders, like that's the people that need petrol, or that's the people that need food right now. So, like, what is better? Is it better to pay the spot price and say, hey, I've run out of fuel, I need something now, I'm desperate for a trade now? Or is it better to say, I'm gonna plan ahead, I'm gonna wait for the best possible price? What do you think is better? Let's chat, get behind it. For me personally, I'm a limit order trader. I want the exact best price. I'm not willing to overpay, unless obviously I've got to force it for TradeDelicious, but that's something different.
So depends supply and demand. If you're in need now to get something, then you're just going to go for market. If you see a price that you want to get into now, then you're going to go into market. If you are looking at a price, it was when we were talking about the motorbikes, I look for a motorbike, I see something that I need, I buy it. It's the same thing as let's say you go to the supermarket and you're really, really hungry. You're going to go there and you're going to start buying things sometimes that you might not need, sometimes you're not paying attention to what you're buying, sometimes you're just going to buy it straight away. But when you go to the supermarket hungry, you've got a list of criteria, you want to see these things, and then that's where you buy those particular things. So there you go. It's like you want to see a certain criteria and you're buying those specific things off your particular checklist and the price that you want to buy them as well. Whereas somebody like me, I'm hungry for them pips. I'm going to get in the place where I need straight away. I'm hungry. Go in there and I buy the thing where I see it, where I need to get it. That's what I look at.
Alex, do you know what I'm hearing there? I'm hearing that like our trading plan is our shopping list. It's our best case scenario. I'm going to go into the supermarket and I'm going to get some greens. I'm going to get some fruit. I'm going to get some proteins. I'm going to get some lean carbs or whatever the case. But then you go shopping when you're hungry with no shopping list, no trading plan. You just randomly enter into the market and you basically come out with like just chocolate.
I'm the type of shopper that I buy chicken, the exact same amount of chicken, the exact same amount of bags of rice, and I just do that every single time I go. So I already don't need the checklist because I know exactly what I'm going and what I'm looking for. Maybe that's the same what I'm looking for in the market.
Why was your metaphor a chocolate bar metaphor then? Why was that the
it's
first
always, because, just I can't remember the situation where we was talking to this exact same. I was talking to a trader and we were talking about the exact same thing. And I had to explain something to him. I used the metaphor of the chocolate bar, and it helped him understand it the specific time of what the context that we were looking at the market in. I just gotta remember what I was talking about. Sometimes, because the best times is when I speak to traders so much, especially when we're talking about if a trader's just blown their account and what maybe they could have done better and what they did wrong. And it's very easy to do that when you're looking from outside within. It's sometimes very difficult when you're tunnel vision in your own trade, in your own emotions, to do that. But when you have somebody that is a third party that can just look a little bit subjectively and say, explain things in a different way, it does help. And it doesn't matter how big of a trader you are, how experienced, it's always better to take that third party. Sometimes as well, like meditation, when you take yourself into a meditation, you've got to take yourself out of your body to look at yourself in maybe a third party type of view. The same thing is when you're trying to look into your trading, when you're going through times like I'm going through now, you know. So that's what the situation with the chocolate bar. I just got to remember what the metaphor was.
That's you know, that's super interesting, because yesterday I shared some notes around psychology, and I got some feedback which I'm really going to meditate on today, and it was talking about risk aversion. And being risk averse is like trying not to lose. We've got a really interesting comment here. It says, I like to think of the markets as me wearing a meat suit in a lion's cage. If you're not smart enough, it will have your arms off. Now, that's, to me, that's like being afraid of the market. Now, I know we can go the other way, and we can almost look at the market as this big meat suit, and we're the lions and we're going to attack it. What's the happy medium? What's that balance in the middle where we kind of respect the market, but when we seize opportunity, or when we see opportunity, we seize it, we push the throttle. I'm fantastic at seeing opportunity. I'm not great at executing on that opportunity to maximize it. I like to drip in a 0.1 and make about $7 and go, hey, look at me, I managed to catch 7 pips. But the problem is my account goes, yeah, and like you haven't even put a drop in the fuel tank here, because you know, you got a good size account and you're happy going, oh, I made $20 today. And you literally caught 20 perfect pips. And it's like, you could do this with $200. You could do it with 300, 400, 500. So I'm curious to see sort of like, what's that balance where we go, we have it right. We're not chasing the market, but we're also not too fearful with the market. And I think I'm fearful. I can look at it objectively, but I reckon I'm definitely fearful at times as well. Graham saying, I find most of the time when I market order, it's either because I FOMO or because I'm not prepared for the market. Yeah, I see you said earlier, I trade with limit orders. When I don't think the limit's going to get filled, I FOMO in and chuck the market order on and then cancel the limit order because the price is kind of close enough. But Alex, I see you're out of the market now. What did we stretch?
So yeah, pushed up, broke up above where I had my stop here, because as I mentioned before, I can see it pushing up to this area here, to that 200 EMA on the 4 hour. Especially, you've got all of these highs here. I did think we were going to come down just a little bit more before that would have happened, but we didn't. So that's just it, and that's why the stop loss is in place. The amount of times I've seen traders say, "Okay, I can see it's going against me, but I still think it's going to come down. So if I've got my stop loss here, you know what? Now I'm just going to just move it up here. Okay, now it's pushing. I'm just going to move it up in this high." And now they've just, instead of their risk being 1%, now they've just doubled their risk, and then they lose that, and then they turn around and go, "Oh no, now I've got to get it back. I'm going to go long," and suddenly they go long at maybe at the top of a range, and now price has gone back on them, and now they're going through the range, and now they're panicking, so they close that, goes back down to the bottom of the range, and that's how people chop up their accounts on a daily basis. And that's why the set and forget thing for me is super, super important. As much as it's bit me before and lost a whole 2 hours of profit, the reasons for that is just for those types of things. But I see it a lot.
Do you see this? Do you actually see that in a lot of traders' accounts, that this kind of behavior?
Yeah, I see that, and it doesn't matter. It's not just choppiness in price action; it's choppiness in decision as well. And you know, I've seen it in my own trading. I went from being on the 1 minute all the time and just traded from the 1 minute, and now because I haven't got that much time, you know, I'm looking at the 15-minute and things like that. And so you've got to look. So you've got to make those. It transitions in a way. Let's actually have a look on the 1 minute what this was actually doing.
Yeah, you said choppiness, like lack of conviction. That's like, a friend helped me out with this, and he helped me kind of identify how simple it would be to trade price. He said, you have an analysis, yes or no? I'm like, Yes. He said, okay, you know where your stop loss goes, yes or no? I'm like, yes. He goes, you know where your entry is? I'm like, yes. He said, then just hold the trade. Don't change it at all. You get in, you place your risk, you walk away. I don't walk away, but don't meddle with it. That's what he was saying. And trading is so simple. When I do that personally, trading becomes a whole easier ball game. Are you looking for a pullback continuation to the high side?
I'm just, just looking at different structures of what's going on at the moment. I'm not really pulling a trade until something screams at me, because obviously I've just lost one. So unless something really screams at me, I'm not pulling on everything. I'm in defense mode at the moment. You normally see me, being really, really aggressive. At the moment, I'm being in defense mode, just because I lose this account. At 5K. So we had that 15,000 withdrawal.
Mm-hmm.
Where is that 15,000 withdrawal? We had that 15,000 withdrawal. After that, it was just a streak of losses. That was a big mistake on the DAX, huge mistake. But yeah, a lot of redness. But
Well, let's change that. Let's change that right now. I haven't even done I've done an analysis this morning, but let's pull up the chart and actually look for some proper setup. So we're going to do a deep dive into technical analysis. I'll break down everything that I can see in the market today. If you're liking what you see so far, give us a thumbs up. We'll keep the lot size nice and high going into next week. Andrew's saying a shop sells a new product. Customers still not appreciating the new stuff, so the shop gives a discount, 5%, 10%. Customer starts buying a bit, then influenced by a bulk, and market goes crazy. This reminds me of a thought process I had a little while ago, and I was talking about an auction hall. And I was talking about how, hundreds of people would walk into this auction hall, and the auctioneer holds up this thing. And everyone in the auction hall goes, well, what's that? And they're all trying to work out what it is and what it's worth. And we can use the same analogy with price. Nobody knows what price is worth. It's worth what it is currently right now, but it's always changing. So market participants are always trying to find out what price is actually worth. And so this auctioneer holds up this item. And all the bidders are sitting there going, what's that? And everyone's sort of clucking, they're all making a bit of rustling, making a bit of noise, and no one wants to commit. And all of a sudden, someone from the back of the room, he goes, $20. And everyone sort of turns around and goes, well, he must know what it's worth. And the price starts to move. And the next guy goes, well, he knows what it's worth. Maybe it's worth something. $25. Then someone else bids $30, $40, $50, $80. Next thing you know, price is running. Why? Because everyone thinks it's worth more. And so it creates this self-fulfilled prophecy where the market is fueling its own price point. And then it gets to a point where it starts to go $150, and the market has like literally pushed, and it keeps pushing, and it gets to a point when no one else is willing to pay 160, and so it stalls. And then the guy left at 150 goes, maybe I got caught up in this. Maybe I shouldn't have bid at 150. Let me pull my bid off the table, and price starts to drop a bit. And then the guy with $140 bid, he thinks, oh, I don't want this for $140. Not if that guy doesn't want it. And then he pulls his offer off. And price will return to the point where people are willing to pay for it. And so I think that price movement is just a reflection of people's beliefs of what price is worth based on speculation. And this is why we talk about interest rates, CPI, inflation, all that sort of fundamental stuff, but also technical points. This is why I trade from supply and demand. People told me that, hey, we thought this was worth this in the past, and we're willing to pay it in the future as well. So a bit of a random metaphor, but it's something that I like to think about price, and I definitely factor this into my trading. I'm always looking at what people are willing to pay for something based on the previous price action. So that's kind of how I break down price. That's one of the narratives, one of the stories I like to tell myself. And what we see today is people are just kind of agreeing that price is worth round about the same. Now, I want where people start to disagree and the market runs. I want these moves. I want the market to start showing, a direction. I want pullbacks. I want clean structures. I want price points to trade from. This isn't where my edge comes from, which totally sucks, because today we're going to be clicking on this up here and we're going to be changing this to 11.5. So we're going to be trading over $1 million position. And the price action doesn't make sense to me. So I'm going to be that guy who just randomly puts a bid in the auction hall, not knowing what this is or what this is worth or what other people are willing to pay for it. And that's where my edge comes from, is anticipating what other people may be willing to pay for this. So top-down analysis on this, 4 hour. We're coming into this zone up here. No idea why I've got this zone, but interestingly enough, price has already come into it, respected it. Head and shoulders pattern, I can already see it. We've got this beautiful left price point, push up, breakdown, retested all this liquidity highs, comes, sweeps it, starts breaking down. Nothing for me to look at on the 4 hour, not where price is. 1 hour, even more messy. We'll drop down to the 15-minute and price is in the range. We've got equal lows. Like to target these equal lows. But we've also we have taken liquidity from this high. So this is what we were talking about with liquidity. Where would stop losses be? Where would orders be? And we can look at this high right about here. Let me go ahead and put a line on this. And so if we looked at this line here, I think traders make decision based on highs and lows. So if price was starting to push down here and then retrace, maybe sellers might have had their stops on this level. This is what we talk about with liquidity. It's orders being filled in the market. Could be market entries, could be limit orders, could be stop losses, could be buy or sell stops. And when I see kind of movements like this, it brings my attention to the chart, because breakout buyers would have probably been on these highs. Stop losses would have probably been on these highs, yet the market didn't go higher. And so it starts to give me information about the market that I can use to formulate trade ideas. Not in this scenario. This is just sitting in the middle of nowhere. So a nice little break and retest would be good. If the market could push out of this range convincingly, perhaps something like this would make sense. I don't know if we're going to see this on stream. Don't worry, I'll get that 11.5 lot in on something. But that's the thing that makes the most sense to me at the moment. Looking at GBP USD, same kind of story. Market drove high lows. No, I can't get a read on this at all. Nothing about this feels.
Yeah, good. If you look on maybe pound, if you look on pound, that's had it looks like it's just got a close above the 200 EMA on the 4 hour. And it is pushing up to take out those highs. Now, if you look at the market structure and that massive wick as well that you had on a 4 hour.
Oh, hang on, let's have a look at the 4 hour. Oh yeah, nice.
So you can see it's already taken every participant probably out, found loads of buyers, because that is just massive. That's just a massive screen for loads of buyers coming in, and then it's pushing up, and now it's got a close probably above the 200 EMA. So yeah, it looks like it's finding a little bit of a momentum. And
so what would we look for?
Best bet.
Continuation. We've already had kind of that initial drive, consolidation, lovely little like wick to the low side, and a lot of buying interest as well. This
retest top of the range.
You think it'll sell lower from here?
Or no, retest at the top, break and retest of that of the top of the range.
Yeah. So if we wanted the best possible price, I'll jump down to the 5 minute. I think the best possible price, and I put a fib on this, would be kind of like in this price point, round about here. I think if I was looking to long, I'd be looking for potential continuation to the high side. I think that would make sense. But I don't know, we've equaled this, and I don't know, there could be a lot of sellers defending this high. This is rough, Alex, like 11.5 lots on it. Why can't this be like yesterday? What did we even do yesterday? Let's have a look at the trade history. This is what we did. We caught a long from here and got out here.
Nice.
I don't know how many pips that was. 7 or 8. We got. Yeah, we got a few pips yesterday because it made sense. price was driving into a price point from over here, and I was like, yeah, we've got this beautiful sort of like fib retrace, buying interest down here. I think the market will just wick up. This is rough. This is really rough today, Alex. This is going to be an absolute do as I say, not as I do kind of scenario, I think.
So are you buying or are you selling?
I still haven't made my mind up. I think I'm going to lean into chat and see what chat tells. Give us some feedback, chat. What are we thinking? We thinking bullish or bearish on the dollar? Or is there another pair you want us to have a look at? In fact, Jordan done this beautiful piece yesterday on New Zealand USD. And let's see. So there should be an order placed on New Zealand USD. If price is below that, we're in profit. If it's above it, we're in a bit of drawdown. And Jordan was talking about selling New Zealand USD based on a seasonal pattern. If you haven't seen it, it's in yesterday's stream. It was a really good half-an-hour segment he did where he spoke about the fundamentals, and then he showed some graphs. And wow, did it look good. 85% hit rate over a 25-year period based on this seasonal pattern. And he was talking about 100 pip moves. So super, super interested to see what's happened here. Oh, Jordan sold us a bad one here. Jordan has sold us a bad one.
In all fairness, that is against the dollar, though, isn't it? So
yeah, true. Right. Well, I'll tell you what we're going to do. We're 40 pips in a drawdown. Let's pull up the toolbox so we can see that we're floating about 40 pips there. I believe in this. I think we're close to a good selling point. Let's go ahead and add our second order into this before Jordan rocks up on the stream. We're going to go ahead and put our stop nice and wide. We're giving the market room to breathe. So markets were selling active up here, pulled back, a little bit of selling interest, and now has continued higher. Now, it would have to start breaking this high or this high for me to say that buyers are really driving price on a daily. So yeah, I'm happy to be sort of averaging a second order in this. Still only going to cost about $500 if I'm wrong. And if it is, yeah, Jordan's analysis will be, wow. He said it's a seasonal play that starts on the 5th of May. And I think it runs to like the 20th. It runs for like 15 days. So we'll do as I say, not as I do. Please do not copy these trades. Let's get away from that before Jordan gets in here and sees what's going on. You might get your break and retest here.
Oh no, I'm already back in, mate.
Oh, nice. Okay.
Yeah. I'm already long.
Hang on. You're already back in, and you're already nearly $1,000 in profit. Alex, how you do this and sit on this so calmly?
No. As I said, it's like I had at the start a kind of a bias that it's going to push up, but I did think it was going to come down a little bit more, and I don't mind taking that little bit. You know, I'm greedy. I like taking that little bit before I get. So I took that risk, but it didn't work out. So I'm not going to. If the market is showing me something and it's not going down, then why am I not long? So I'll get long.
And you're getting long in a big way. This is breaking out nicely as well.
Yeah, with keeping the same risk, 3 points risk. You know, 370. Because I saw what I'm seeing here, the break, the retest, also on the lower time frame as well. So
yeah, this is what I wanted. I'm all over this now. Market's showing an intended direction. We got a move in the market. It's clearly to the upside. I don't want to be trying to catch shorts on this. I want to be a trader that's trying to catch a nice little pullback and a continuation to the upside. And actually, Alex, do you remember? I think it may have been last time you were on, or the time before that.
Yeah,
you were going against the order I had. We both made money out of it. We both had a
yeah. That's crazy, isn't it? I love that. How you can be like two thoughts, two different ways of trading, be different sides, and still make money. That's insane.
Yeah,
that's insane.
Well, I don't think I'm going to be going in a different direction to you today. I'm just kind of scanning the highs from the past, and I don't see a reason. I think there's a lot of upside potential on this. I think the market could really go. So
just look at this, though, man. Look at this price action. It's like these are things where I would have looked at that and I'd be like, okay, pushed up. You had some kind of push up, retrace, and these kind of candles, I'd be like, yeah, straight. This is the kind of move that I would have liked to have seen, and then it just nope, bang. What What a retrace of a move that.
Yeah,
50 points.
I just see here we're going saying next thing I know I've bought something for $150 that's worth 20. Literally breakout buyers buying the high, and then the market fully reverses. You were the one left holding the ball, and man, how much I've done that. And yeah, I don't like buying the absolute tops. I like buying on discount, but I like the market to show me that it's kind of potentially worth more, that there's buying interest, and we're seeing this now in EU and GU. So just trying to pick some price points. Martin, good morning, saying Rich is gambling today. Rich is going to be sizing up to a level that is probably not best risk management. So I'm going to dance around the word gambling. Rich is going to be not using best practice today.
I just, love, as soon as I can go onto the 1 minute, the moves are they're a lot cleaner on the 1 minute. If you've got the bias correctly, and these are the kind of breaks, retest, continuations are really nice. Also, you see that kind of W pattern, or a double retest, and then just the exact same, the 50 fib.
Yeah,
and that's normally my target. My target would be the extension fib there for just a 2R trade.
Do you ever get tempted
Super
to
nice.
extend your targets in this when the market drives so aggressively out of the range? Do you ever get tempted to sort of go, maybe I can go for 3,000, 4,000, 5,000?
When I look at something like that, yeah, because it's like break, and then to go to these highs, it's just, yeah, it's something that you could push for an extra little bit, but we'll see what happens. You never know, though. You can't. There was one guy that I was speaking to as well, that I could understand a little bit about where his problem was lying in his trading, and he was saying, "I know the market's going here."
No.
All he just said is, "I get into the trade, I know it's going here, but it's not doing what it's supposed to," and that's why I hear myself every time. I'm like, maybe it could. This is what I would look for. It's like the probability. It's always playing with the probability of something actually happening, because at the end of the day, we're just speculating. Yeah. We're betting on a movement in price. So a lot of people can say gambling, but you can have an educated bet or an educated speculation on what price is going to do it. You don't know what it's going to do. So when you come and have somebody saying, "I know what's going to happen," then they're holding on to trades, they're holding on to their losers, and then suddenly when they're getting that winner, they're holding on to a trade when they've got profits, but they're not taking the profits. There's so many different things problems from coming from that type of languages. I know. Yeah. I know in the markets is super, super, super dangerous.
I don't know. I'm going to say it today. I don't even have it. I don't even have an idea. I want to sell EU. I've just had a look at EU, and I'm like, maybe I can make an argument for selling EU. I'm so
Let's have a look.
Unsure about the and it's basically, will this wick hold? That's the play. It's will this wick hold?
That remember at the start of the stream, I was like, that's a target right there. There you go. So I wouldn't be surprised. That's the first time that's been hit. First time that's been hit in this whole of this move. If you ever have a look on when a 200 EMA gets broken, the first touch, normally you see quite a big reaction. You can have a look on this on many different instances. Maybe that one didn't work, but here you go. You got a couple of instances here. You got one touch, quite a big reaction. This is on the 4 hour, okay? So these one touches of, especially in a downtrend, are quite big. One touch on there, that's on a 4 hour. The biggest move on that was 60 points. Maybe you just wanted to get 30, you would have got that. There's quite a nice trade that could be made just from the first touch. And that's actually this area here is what I got caught up in, to be honest, in a lot of my trading, because that's where I was looking for the targets for up here. But,
man, this is tough today. Right, I've got a trade idea. Alex, you'll like it. It's
nice.
it's in line with your idea. It's a long GU.
Okay.
I've got limit order
Nice.
sitting there, just sitting, chilling. 11.5 lots. If it picks me up, I'd be happy to take a loss on this. So jump down to the 5 minute. We've got this almighty beautiful bullish drive out of here, and I'll be sitting with a limit order right sort of towards the base of this candle where it drove up. So this would be an okay trade for me. I'm okay taking this, and we're risking $1,250. So it's going to be an interesting one. I'm trying to find a reason to sell up in this price action, and I can't confidently do it. I could confidently take a long on this. I can't confidently take a short on GU. So if I was going to short EU, this would be the price point. It would be this. I think it's a blue line on the chart. So this would be the price point I would have market entered as a sell, like we were talking about earlier. Gas tank's empty. Got to get an order in there. Got to get some kind of fuel, and I think there may be an opportunity to just sell, and not much profit on this. Probably wouldn't be looking for more than 6 or 7 pips. Now that pullback would
$600.
Yeah, it'd feel GU. So kind of happy with that if it will do it. But like I say, it's tough price action. Tough price action in this one.
Rich, what were your thoughts on ICT when you were doing it? Because I'll give you an answer. I'll give you a reason why I asked. I've done lots of interviews with traders, successful traders, and I'm seeing a lot of new traders that are making a lot of money coming through from ICT concepts.
Okay.
And you've looked at ICT concepts, if I'm not mistaken.
I have.
Tell me, what is the secret? What are they looking at? What is? Do you like his content? Is it something that gives a good read on the market? And I say this, the reasons why, because even Alan, we had a guy that won a 250k boot camp, and he started using ICT concepts on that boot camp. Passed three-stage, very, very lovely trading. So it's quite interesting to hear somebody that has done it, because you don't use his concepts. You only took a little bit from it, no?
Yeah. So what could I give you as a summary from well over 60 hours of ICT? So I had 2 goes at ICT. First one was about 100 hours. That was, I'm going to say, close to 3 years ago. I spent 100 hours, easily 100 hours. And I don't think I was at a point where I fully grasped what he was trying to communicate. So a lot of that time was spent probably not efficiently. So I went back to ICT concepts, maybe I'm going to say at a guess a year ago, and I spent another 60 hours. I went through the 2022 ICT mentorship. It's free on his YouTube channel. It took me about 60 hours, and I did it properly. I genuinely worked my way through this step by step, took all the notes. Now, I believe a lot of that is based around index trading or indices. Now, I'm trading the FX market. So did his stuff at its core help me? Yes. Was it the biggest thing that helped me based on the time it took? No. I took a couple of tiny ideas from him that gave me an idea that I thought price may be able to react and move in certain manners. I then went and back tested kind of around the concepts he was talking about. I noticed different things within that stuff that he was talking about. Nothing that he touches, nothing that he's spoken about with any of the content I've seen, has he ever touched on this stuff. And I was inspired by what he was talking about, but I actually found these tiny nuances within price movements. And it's those nuances that I trade today. So I was definitely inspired by him. I wouldn't say that I trade the concepts directly, because they just didn't. I couldn't find a way to reliably see they were profitable. And one thing I would say, and there's not many things I grade myself a 9 out of 10 on, recording data, I'm a 9 out of 10. When I show you kind of the back end of the work that I've done and how I record very mechanical price points, it wasn't profitable within the way that I was interpreting it. Now, I may have been missing a couple of ingredients, and there are traders that definitely have caught onto them concepts, and as you say, done incredibly well. I might have been taking a cricket bat to a baseball game. I might have been using the wrong tool in the wrong environment. But what I was encouraged to do was find kind of these liquidity areas, time, price. Are the markets driven by algos? If they were, how would they be coded? Get inside the head of the code, all that kind of stuff. So yes, it helped, but it didn't, not for the time invested. And I wouldn't encourage newer traders to go and learn that stuff, because I believe it is just it can really confuse you. Supply and demand is super simple, and I get more traction with it. For me, that's just me.
100%. I think even, remember when we had the London trading show, and there was so much value in so many things that people were saying. But I think that the way that people can get the best out of themselves with all of the information that was there was taking a little bit from everybody, testing them and finding what works for them with everything that they were saying. And I feel like something like that as well, like you've said, you've tested it, you've seen it, doesn't really fit your kind of style. You couldn't see that it could make you work, but you took something that you've added to your trading that has worked for you. So that's it's quite interesting. It's quite a nice, still quite important to do, but that's it's quite interesting. I feel like a lot of people, they go there as that's going to work for me. They're hoping that ICT is going to work for them, but it's about how you kind of address what the guy talks about. I think not taking everything as stone cold rule as well.
Yeah, but I've got the same question to you. So, are you more inspired? Because I see a little bit of soul trading within you by how you trade.
Soul trading.
Yeah, I see a little bit
of trading.
Yeah, like how soul trades, how soul sort of scouts the market, how soul reads the 1 minute price action. Are you inspired by that, or am I just missing?
No, I like the 1 minute because I'm in, and I know I'm in the right position, and I know when I'm wrong. And I'm impulsive. I get in with market orders. And normally, it's probably one of the reasons why I've been struggling as well for the last few weeks, is because I've been taking myself out of my 1 minute, in front of the screen all the time, and just trading in different time frames, looking at different things. Also, in all fairness, that back testing that I did as well, which I saw my win rate and everything, I was doing that off the 15 minute. I wasn't doing that off the 1 minute as well. So it was, so maybe I have to go through and do some more back testing. But no, this is something that I've just been trading for a while. And I just found that the 1 minute for me was just something that just fit me and my personality. And that's it. Soul, I couldn't trade like Soul. Because Soul, I just couldn't trade like Soul. I haven't got the nuggets for it. Honestly, I haven't got the nuggets for it.
I've seen Soul's. If you don't know who we're talking about the CEO of the 5%ers, today's sponsors, 5%ers. It's and Soul's equity curve. I've seen it, and it is,
It's just you see. It's like if you look closely, it's like little ladders. But if you take a step back, it's just like a long equity curve. Mine's not like that. Mine's like dips, hikes, dips. It's like higher highs and higher lows. At the moment, we're going through a little bit of a Quasimodo period, so this is a potential reversal. If I could trade my equity curve, would be all right, guys. But no, it's but his is very Gary Langley. Gary Langley is very, very, very similar. Yanis, super similar. I probably look at their trading similar to Saul's trading
Okay.
in the way that I trade, because Saul doesn't mind if he gets into a position. Let's say he's got a bias short. If we look at the chart, he says, okay, I'm wherever it is, I'm going short here. Gets into the market. First of all, he gets into the market. Whatever happens, then he builds up his position of how much that he actually wants. So let's say it goes against him 10 pips. Or no, 10 pips is quite because he's scalping. So it goes against him 2 or 3 pips, finds a supply area. Okay, he's going to add a little bit more. Goes against him again. Now he's adding a little bit of bigger size, very close to where he says he's wrong.
Okay.
Then that's how he kind of builds his overall position. Me, I'm like, that's my position, that's my stop loss, that's my take profit. That's it. I'm like super simple with that, where he plays with it.
Man, I love that. I like what we're doing on NU at the moment. This is my guilty pleasure: building orders, stacking orders, getting in a better price, a discounted price until the market says, "Hey, you're wrong," and then accepting that loss. That is by far my favored way of trading. The problem is, my best trading comes from nailing price points with full size tight stops, and it just. I have the psychology to do this. I'm chilling. I don't care about this. I'll make money out of this analysis. Oh, hang on, hold on, back up. That's like saying I know where the market goes. I'm confident I'll manage risk around this trade. And let's just leave it there. But tight stop losses, exact entries, that's where I make most of my money. The problem is it's where you need I think you need bigger psychology to do that. But yeah, I am definitely inspired.
You have to be built differently. And I look at Michael, Trade the Pool. Same thing. He doesn't, when I used to speak to him about trading, he used to just like get in, doesn't matter where it was. If it goes against him, he doesn't mind adding into the loser. And if he wants to kind of rebalance his book, maybe he goes the opposite way, makes a little bit of money, that he really plays in an area where he can play with. And for me, it's too complicated for me. All I want to know is just, I want to keep everything clean, especially if you're not full-time trading and you've got other jobs and you've got other things that you need to be doing. You can't be, in my opinion, you can't be playing around with positions. You just got to kind of keep the way that most of us trade. But that's the thing with trading. No one thing fits all. Like everybody's understanding of the market, everybody's pattern recognition of the market, everybody's ways of dealing with their emotions are all different. So no one fits all. That being said, people can learn off other people's experience and other people's problems. Like, let's say if I've got an issue maybe with dealing with the data and things, because I'm less, I take screenshots, I take videos, and I do some markups. But if I need help with getting into the habit or doing more data analysis, who am I going to go to? You. I'm going to ask you for your experience. I'm going to ask you what the best way is to do it. So people can help other people, but at the end of the day, you've got to find your own way. Wow, such a long-winded.
No, you raised such a great point with that. And interestingly, they all build orders, all trade negative risk to reward, and they all do incredibly well. What's the common theme here? What's the common theme? And if you don't know what we're talking about this. We're talking about identifying an area that is of value to you. And we're talking about saying, okay, I need my stops to place where I'm wrong, which would be here for me. And looking to just say, instead of going in with a full 11.5, let me just put in one lot. Let me just put in one lot right about here and just see how price moves. Maybe if it comes up a little bit, might add in a second lot. If it takes this high out, that's where my stop loss will be, and I'll switch my bias to longs on a pullback. So we can see that this is what we've done so far. We've added one lot. We're down $8. Are we stressing? No. And this is how I've seen many beautiful equity curves built, but it's not for everyone. So find out what works. My biggest loss came from doing exactly this. Only I didn't put my stop loss here. I didn't put my stop loss, and that I believe is similar. Awesome, nice little.
Well, it's about to get there. You shift off. We'll have a look at hitting the take profit together. There
Let's
you go.
go.
So you got, let's go, baby. That's what we want to see. Finally. Oh, this is the bit I
Hold.
hate. This is the bit I hate, man.
Yeah.
This bit. This is
Hold.
oh, don't do it.
It's gonna do it. No, it's not. We're not even gonna go there. We're not even gonna go there. We're not even going to
Yeah.
tease Alex with the idea that this EU trade has run into a little bit of profit. Okay, it's gone negative. Let's pull Alex's back up right quick. Now it looks lovely, lovely read on the market. Like really nice read on the market. We just need a couple of extra buyers to come in at this price, and it'll push or it'll continue to the high side.
That doesn't look good. It's always when you open your mouth, isn't it?
Just okay. I reckon within the next 3 minutes, Alex is going to see that TP and that bell ringing. That's my thoughts. So while we're waiting for this to come into fruition, I'll just pull this back up so we can see that the market's just finding a little bit of value in this area, and we're up $17. Now, what were we risking? This is where it gets a little bit difficult. What was I risking if it hit this? Well, with one order, I'm risking $100. But I was probably going to put 2 or 3, so I might have been risking maybe $150 to $200 by the time price reached here. Now we're at $17 profit. Now there's negative risk to reward, and then there's really negative risk to reward. So if I am right about this area holding from a higher time frame, I don't want to be taking $16. I don't want to be taking $20. Ideally, I want to be sort of getting sort of $60, $70 out of the market. I've got to let the winds breathe just a little bit as well. How would we're still showing a little bit bearish.
No, we don't. It actually doesn't look good. Let's see, we get that little push, maybe like a little bit of what's that? There was a word. You know, you've got a product, you buy a product, barcoding. You know that kind of barcoding kind of pattern where it just comes and makes a disgusting red candle and just goes. So we could have like a little bit of that barcoding right there.
Mm-hmm.
I hope that's what happens.
Mm-hmm.
You know, that's we'll see. But
there's a saying, mathematically, does averaging in like that make more money? So my personal opinion is if you can pick a really good price points and read the market well enough, averaging in will make less money. However, it only takes a small shift in the market for the market to either not hit your limit order, to move differently, to wick you out of a trade. So we've got to look at like, do you want to do 100 mile an hour for 1 hour, or do you want to do 1 mile an hour for 100 hours? They end up in the same destination. They just take a very, very different time to get there. And like my drawdowns can be terrible. Like genuinely, I can have big drawdowns because my upswings can also be big. So I'd rather I do like averaging in. I think it makes sense to me to average in.
People need to realize though how to average correctly. I blew up. I got liquidated heavily because of this kind of. I was learning. I saw something when I was first started trading from somebody that was averaging in, and he was teaching it totally wrong, or he was teaching it and I didn't understand it. When Soul and all of these people, everybody, they do these kind of techniques, they still find the place, their worst position is the first position that they're getting in. They find out where they're wrong and they still work out their risk. So they're still, if the worst case happens, they're still only going to lose, let's say, a maximum of 1%. But when they average, they're averaging into, or they're laddering or averaging in, the closer they get to their stop loss, they're actually losing less. So they're actually, but how I was getting taught was if it goes against you, you get in again. And if it goes against you more, you get in again. And you don't get in again with the same risk. You don't double or, you know, okay, I've got one lot here and my max is, I don't know, but then it goes against you and you put another lot and then another lot. No, it would be like, okay, I've got one lot and I'm going to give it 3 times I'm going to average in this particular area. So I'm going to put 0.33, 0.33, 0.33. Now your maximum risk now, instead of being, let's say, $100, now it's suddenly become $65.
Yeah.
That's how you do it. instead of averaging in and martingaling your way to a broken account.
Yeah, but this is why I think it didn't appeal to me early on, because I don't want to be getting in with 0.33 and making $30. I want to be getting in with my full size, and I want to be making $100. And this is that was the problem with me. I was like, well, I want to be getting in full size, and I don't want to be making 20, 30 bucks in a trade. I want it to pay. And the problem was the market would oscillate in and around. It'd do what it's doing with Alex's trade right now. It would breathe, it would move up, it would move down a little bit. And in those movements, it gave me the ability to sort of play with my trade. So it's not for everyone, but I think everyone who goes through that, probably most people who go through that end up taking a big lesson from it before they find that happy medium. Like you did, like you did, like I did.
I actually used one of the techniques. I was, this was like 3 years ago, because we were doing something called Over the Shoulder, or Trader Over the Shoulder. It was a podcast, and we were basically like, I was the newbie trader, they're the experienced trader, they're showing like their experience, and that was the concept. And I took one of their concepts and I started, trading with, instead of getting in for a full position, laddering in. I still passed the challenge and made money, but I was finding I would get left behind before I could get my full position on. So let's say if I wanted to get the same thing, like I want to get a full lot on a position, I would get in 3.3 lots, and then price would move in my favor, and then I'd actually have to average into a winner instead. And I didn't want to do that. I wanted to get my full clip in, my full amount of risk at the place that I wanted to go in, and get the full amount. I didn't want to break it up, because I was noticing I didn't get the chance to get back in. I was actually, making my risk a little bit bigger and my reward smaller, because I was actually buying into the winner instead. So it's kind of similar to what Rich experienced.
I used to do it without high time frame context as well. And then 1 minute scalps would turn into position trades with the size of scalps. And it was no good. Trading Leprechaun saying, Rich, that's by far the most effective way I've grown my account. So it works for some of us. It genuinely works for some of us. My equity curve on one of my accounts looks like something I've never produced before, because that's the method I use. And I'm sort of working out how to pivot my trading into that way. Is it the way that I want to be trading a very large account, or do I just want to keep it separate on a smaller account? Des raises a really good point. You need to find something that fits your risk tolerance, lifestyle, theoretical perspectives, and so on. Yeah, it's got to be customized to you. It would be no good me doing Alex's workout. I would die. I would literally die within the first 5 seconds. And you've got to do what works and what fits you. Same with trading.
Rich, weren't you a bodybuilder? Rich is a bodybuilder. Rich has got more experience in trading than all of us put together, including myself.
We'll not go there. Not today. Not on today's stream. Right, I'm going to need a favor. So chat with your 100% win rate. You know what's coming. We got into this mess together. We're going to get out of it together. It was your doing yesterday. You turned up and gave us 115 likes on yesterday's stream. You are the reason I'm trading 11.5 lots today, and I am stuck. I am stuck in the market. I do not get a read on price. I'm really, really struggling to find where I want to be trading, what I want to be trading. I've got 20 minutes left. I'm going to execute on this 11.5 lots, and I think it's time that I start leaning into your win rate, your experience in chat as well. So preferably, best spreads will be EU-GU, preferably. So if we have any ideas, now is a great opportunity. I'm probably looking alongside of a market entry, because I need to get filled. Just before Alex's trade pushes up and hits take profit, I'll show you what I've got pending at the moment. I've got a buy limit on EU at this level if it pulls back, not filled yet. And I've got a buy limit on GU, which it is just sailing off to the sunset. So that's my best guess at the moment, but it looks like it's not going to get filled on stream. So now I'm going to need a favor. What are we looking at? What are we leaning into? Obviously, this is for entertainment purposes only, but my promise is to you to commit into a trade live on stream. Maybe I take the opposite side of Alex's trade, right in front of his take profit for and hedge off his position?
Short gold.
Short gold.
It's not a bad idea, but no, actually, don't do that. Yeah, do not do that.
No. Well, I'm not getting filled on these, and you are. That is just teasing your take profit.
It is teasing. It is teasing me a little bit.
Well done for holding it and having the nerve to just sit in your position and yeah.
Well,
what's Des saying? I
those.
had a risk management idea, which I haven't taught anywhere. Put a trade on 1-to-1. If it loses, double the risk, keep the position size the same, and keep adding additional. Isn't this martingaling? I'm just sort of.
Guys, I had a risk management idea, which I haven't put a 1-on-1 trade. If it loses, double the risk reward, but keep the position size the same. Keep doing this until adding an addition.
That's martingaling.
No, because if he's keeping the risk the same, he's just opening the risk to reward.
Okay. Yeah, if you're in a trending market,
put a trade in. If it loses, double the risk to reward, but keep position size the same. But then, interesting
against you. Yeah. But if you keep trending against you, you're just going to 1R, and it'll get to a point where you need like 25R.
And then, and then it gets to Forex, maybe in equities. Because if you get, because it trends so much, let's say after earnings, you've got, let's say PayPal, that had really good earnings. Let's say you had PayPal and you got into a position and you were wrong on the position, but you were long. You could probably do something like that and it would work out. The problem is with Forex is because it stays in a kind of commercial range. You don't want a currency going up 10, 15%, like the stuff that happened on yen was crazy price action, 1.5% in a day is ridiculous. People were going absolutely crazy. You don't really see that kind of stuff. So that's why I don't know if you lose a lot. I don't think you're gonna have such a high risk to reward, and you probably won't. You'll just keep losing it, I think. But don't listen to me. Test it. We could be just totally wrong. We don't know.
Yeah, that's I like this comment. Trading Leprechaun saying, Rich, I value time more than anything, and I only look at my P&L at the end of the month, sometimes even less. Respectfully.
That's great. That's really good.
Wow.
Really good. That is super good.
I don't even know if I could do that mentally. I think I'm always checking. I'm always just having a quick check in. Martin's saying, remind us, have I passed the Fivers bootcamp before? No, I haven't. I'm 96% of the way through phase 2, and I'm going through some psychology issues at the moment. I'm sizing down to a level where I'm making about $2 a trade. It's ridiculous. My win rate's 73%, and yet I just cannot. It's that
it's a tough one.
Yeah. No, I got some stuff I got to do up here to get my mind right on that. I'm overvaluing the account. I should be picking it up and placing it in with decent risk on my analysis. That account would have scaled probably would have been live and scaled twice, if not 3 times already. So I'm definitely keeping myself in the poorhouse by not trusting my analysis. So yeah, a little bit of mental growth that I've got to do. The account's growing well. The equity curve looks great. But it's ridiculous. It just dribbles along and just goes up like this. It shouldn't be like $3, $4, $5 winners. It should be $50, $60, $70 winners. But I'm at that ceiling of limited self-belief where got the trade copier set up now, got the accounts on it now. I'm trading at a level that is an all-time high for me, and I'm freaking out when I have a $100 win, $200 win on the back end. It's a lot more than that, and I know it on a subconscious level. I really know it, and it's messing up my trading. So I end up putting on a 0.1 when I should probably put on a 0.15. Sorry, a 1.5. So yeah, just building it slowly, and doing the psychology work as well, which I'll be sharing most days as well.
A concept that I've been playing around with a little bit, and I spoke to a guy about this I think we, with our trading, with a lot of things that we've got, we're a little bit like our own thermometers. You know, you've got like the high point and the low point, and our body regulates between the two. So let's say you have a range where your trading is just amazing. You know, you are, you know, best win rate, you're winning every single trade, and you're that high point. For some reason, something starts in your body or something starts in your mind that starts to regulate you back down the other way.
Yeah.
And the same goes, you've got like a high point, and then you've got a low point. A low point when you're like, no, my trading is doing super bad. I'm not feeling good about this. Now I've got to lock in everything. I've got to lock in with my mind, lock in with my risk. And that's when you start regulating upwards. And it's just this up and down range of high points and low points. And the trick is trying to blow past that range and get to the next range, because all you're doing is regulating, going up, regulate like the market. So that's the trick. If you can get past that high point, you're on to the next high point. I did that with my position sizing.
How do you blow past that high point, Alex? Tell me, I'm stuck on that ceiling. I'm literally there.
Being aware that you have that in you, being aware that that happens. And when you're at that high point, you make yourself feel that you're still at that low point until you can blow past.
Nice.
That's what I did. That's what I did, and that's the way that I look at it. Especially because I used to trade a lot smaller, and I always wanted to trade bigger. But I didn't have the nerve. I didn't have the nerve to trade bigger. I was always looking at the numbers, and I would always make good money, and then I would always like, oh, the numbers are getting to me, and then it kind of like put me off, and I used to blow it. And I started looking at those kind of patterns. I would see it in my bank account as well. I'd see there would be a point in my bank account where I saved everything, and I had a good amount of money, and I was like, you know what? Now I can do a little bit of spending. Go out, enjoy myself, buy myself this, get myself a new motorbike, get myself loads of different things. And then suddenly my bank account is at a place where like, oh, no, actually now I've got to kind of start saving again. I don't like this. I'm uncomfortable. And then it regulates up and down. And that is the same with my trading. You know, it's the understanding that is there. And because I got to a certain place, I was like, okay, I've got to keep the same risk. I know that I feel uncomfortable pushing myself here. And it just naturally came to the next level. Now my level is, now when I'm starting to put on 30 and 40 lots, I'm starting to feel uncomfortable. And that's the next kind of level and the next kind of push that I want to get to, depending on account size, of course.
I love that. I
play with it.
Love that. Like, thanks ever so much for sharing that. Genuinely, that resonates with me. The thought that comes to my mind is when you would go to the gym and you go, I'm going to bench press 80 kilo. I did this last week. This is easy. You're pushing yourself up to a point where 80 becomes your range or your low point. And then you're going, now I'm going for 85. Now I'm going for 90. I love that. And I guess with trading, it's not a physical thing. We can't get the scales out and the tape measure out and see the physical growth. It's so mental. And the problem is with mental how do you feel? And if you come to the market fearful, you can do what you want. You're probably not going to be able to click that 11.5 lot button, which is what I'm struggling with today. The markets look bad to me. I can't get a read on it, and I cannot click that buy and sell button. And we've got 11 minutes left. Alex, sorry, mate.
I'd probably sell pound, to be honest.
Well, we have on Alex's recommendation. We're going to jump down to the 5-minute chart.
I would say sell.
We've done it. We're now in the market on the sell. Let's quickly get a stop in here, and I'm going to put the stop on this high where I'm wrong. So this is the high. Do not follow this analysis in. This is not a trade that makes sense. I promised that I would execute on the amount of likes we got from yesterday's stream. This is what I've done. Price action, I cannot get a read on it. So we're hedging off Alex's trade at the moment, hoping that Alex's trade pushes up and gives him that beautiful profit that he's positioned himself for. And if it does, then maybe we'll have a conversation off after the stream, Alex, about
It's all right. I'll give you a edge in my position. I love it. I'll give you.
Let's have a quick look at this and see how quick this is changing. So we're looking at this order here, which is 11.5 lots. It's the biggest order I've ever executed on the stream. And we're around about 0. So we're just seeing how quick this number changes. So bearing in mind, I'm paying $4 round trip in commissions. So I'm paying round about $45. So $45 in commissions. When I close this, if it's not above 45, it will be a negative position. So, and the more this number goes up into profit, the less Alex's one goes up. And there's a part of me that wants to see negative on this. I'm cheering my buddy on here. I want him to do well. My trade isn't an analysis. Alex's trade actually is an analysis. I just couldn't buy at the highs. It just doesn't work in my head to buy at the highs. I hope someone in chat
you should be up 100 by now, no?
57. 115.
Okay, 100 now. 115.
115. 130. Yeah. We're going to
sounds like a bid. Yeah, it's I can see it coming. I can see it coming down. You could get like $300 or $400 out of that trade.
We're risking 1,058, so we'll keep it calm at the moment. I mean, bearing in mind, 100 and I think $110 is 1 pip. So
we got employment rate on euro coming out in 8 minutes as well. I don't know if that will have an effect, but
yeah. Did you check this? Did you check the Dixie? Alex, you look at the Dixie.
I used to. Now I just look at euro dollar and I just invert it if I need to. It's the exact same. It's literally the same. You just invert euro dollar and it's just that's what's happening. So.
Wow, this is a bit of an anticlimax. $200, $230. And this is, and I'm disappointed. This is not the way I want to build the account. This is not the way I want to make money on the account. And in fact, I'm going to go ahead and practice best practices here. I know it is an anticlimax, but I want to just take the risk off the table and close this trade here. It was an absolute gamble in the sense of the word. It was an absolute gamble. I didn't build this account by doing that. I have to execute on 11.5 lot trade. I wanted to hedge off Alex's position. I did what I'm always going to do, and that's act in a way that tries to put me back in a comfortable position. I was in a trade that I was not comfortable about. Let's go ahead and cancel these right quick. And I wanted to get out of it. I wanted to close that position as well. So, and that's the message I'd encourage everyone in chat is find what resonates with you in every area of your life. If you don't like to lose, if you like a higher win rate, then maybe building positions in high value areas is for you. If you have the psychology to say, I want to go in with my full size and a set stop loss, and I'm trading specific price points or levels, again, go and do your back testing. All the proof you need is in the pudding. If you can record information around it, if you can back test on it. Alex spent his weekend at the risk of upsetting his girlfriend. He spent the weekend back testing, and he got some really useful information out of it. Did she forgive you?
Yeah, I just told her I was working. I just know what I was working on. Oh, babe, sorry, it's got really important stuff I've got to do, So.
Well, back testing is important, right?
It is totally important. Totally important. My girlfriend still doesn't understand what I actually do for a living, so it's fine. She really hasn't got a clue.
Alex, what do you do for
I'm an artist. I'm an artist. That's what I say to people if they ask me. I'm an artist, I paint pictures on charts and hope they do well. There you go.
No, do you know what? I'm going to be genuinely curious. When you meet someone for the first time, they say, "Hey, Alex, what do you do?" Do you have an answer for that? Do you try and explain trading?
I've tried in the past. And do you know when you're speaking? When you're speaking to someone, you get this like glazed eyes. I start and then I see glazed eyes and I'm just like, and they're like, what? And I'm like, okay, I just work in markets. I work in the financial markets. That's it. But I'm gonna start just using the painter thing. I quite like that. I haven't used that before. Yeah. I went to a comedy show and they were talking. When they always like ask in the crowd, it's like ask what you do for a living and stuff like that, and people give them the real thing. That's not the funny part, because they just take the mick. Doctor this, doctor. You should just say something just silly, I sell oranges, and people are like, what? kind of like takes people off their you know, off their thing. But
yeah, I know what
selling
you mean about
oranges.
that glazed up thing. When you try and tell someone, and then the problem is, as traders, we get passionate, we get a little bit too invested, and then next thing you know, someone has never heard about trading before, and we go, yeah, and we use these moving averages and Fibonacci's and pips
liquidity. Look,
and
things go to liquidity. This fair value that, you know.
So I always try and make it relatable, and I just say I'm
Yeah.
in the financial markets. People have an idea of kind of what the finance industry is. Money. They think, oh, money, banking. Okay. In the past, I used to tell people I'm a librarian. That was my go-to. I said, yeah, I work in a library. I said, I'm the tall guy that puts the books on the top shelf. I said, that's my job. But because most of the time in the real world, people won't be able to relate to a lot of the stuff that we talk about, especially when it comes to the stuff that we're sharing on stream. So we try and keep some stuff a little bit simpler if we can. And if you've got any questions about stuff, then feel free to ask. Chat's a fantastic place to sort of bring our attention to the things. If you don't know what, kind of liquidity and stuff like that, good points to have conversations around it and discuss our thoughts.
Also about life as a trader as well, because I don't think some people feel like it is super, super lonely. And the problem is what we've been laughing about is a big problem that a lot of people think they haven't got anybody outside of, their Discord or outside that actually can relate, and it is super, super lonely. And that's why you're here. If you ever need anything, you ever want to talk about just anything in general, you can speak to us, you can speak to people in the Discord, and they will understand you. And once you get somebody and you open up and you find somebody that understands what you're going through, it will make it a lot easier for you, especially if you're in a bit of drawdown and everybody, including the cat, is annoying you. Don't worry, there's somebody there who can make you feel better. So
the cat annoys me even when I'm in profit, so probably don't look for the cat. I just want to touch on this. So Trading Leprechaun is saying, for the love of God, Rich, I would probably watch more if you didn't gamble. Forget the viewer pleasure. So we bring attention to this when we're doing something that we know is slightly off piste and it's not exactly in line with our trading plan. I like to say about it, I like to say, hey guys, we are having a bit of fun here, we are doing this for entertainment, and it's in between those moments that we'd like to try and deliver the higher value as well. So we've got some fantastic shows on TradeDelicious with Louise Bedford. Aaron's got a new show coming out. We've got the US streams as well. So I know occasionally there's going to be a little bit of junk food in there where I am playing around on the account just a little bit, but I do my best to always bring the viewers' attention to it. This is not best practice. This is me just kind of, I'm flipping a coin, I'm having a play with it. But you bring a good point. We're trying to trade our best plan, and actually I don't always get good setups within this hour and a half window where we're trading. And so sometimes I'm trying to sort of push the boat a little bit, it's
well,
really good.
we do the same, mate. We saw in our streams that we were doing at the Fivers that too much of the hardcore education stuff was kind of getting a bit boring for everyone, and these types of things were just, trade the likes and things like that. You've got to understand when you're on something like YouTube. YouTube is for a lot of things, and entertainment as well is something that people come to, and that's what we did. So on Wednesdays we do our live trading, scalping against each other, and if you have a look at the last one, I got absolutely wrecked. I have to wear a clown suit next week, because I was against Jonathan. We made a bet and I was very confident, and then at the end I was beating him, and then he just starts, because he was trading gold, I was trading USD yen, and I was shorting USD yen, but I was trying to scalp it for some reason. Anyway, I made my money. I was like, I'm gonna sit still. He just starts buying gold, did a scalp, and he was in profit like $400 more than me towards the end. So what did I do? News came out. I was just like 10 long, and then I just got absolutely obliterated. But it was fun. Everybody was cheering, everybody was enjoying themselves, and you've got to find the fine line, and a bit of entertainment is good as well.
Yeah, I think so. It can't all be serious. Not everyone wants to eat vegetables all day, every day. And if we say, hey, we're serving up a big old sort of fast, a bit of junk food in this trade, we're going to talk about it as well. So finding that balance as well, because everyone is at different points in their trading. Some people, and we've heard it in chat, some people just want to hear us rabbiting on in the background. They don't even want to, be watching the charts, or they just want to have a little bit of conversation in the background as well. So I'm going to touch on this. We haven't got time to go into it now, but Des, if you put, where is it? If you put this message in the Discord, I've lost it. You put a really good message. There we are. Put this in the Discord, and Alex is back with us on Tuesday, and I'll make sure that I bring this up as a conversation point. And when we've got a little bit more time, we can have a conversation around it. How does that sound? Put it in the Discord, because I haven't got the ability to copy and paste this at the moment. So if you put it in the Discord, I'll make sure that when Alex is next joining us on the Tuesday, we will have a chat about this. My apologies if we don't get a chance to run through everything in chat. Alex, you just closed.
Yeah, I want to go out and do things today. It's my day off. So, news coming out. I don't really want to be stuck in front of this thing. It's beautiful outside. So, and a Friday. So I'm just going to close it. And the news, though, EU didn't move at all. Unemployment rate was just the same. It just didn't do anything. So yeah, that's it for me today. I'm happy with today's trading.
Great place to finish it on. So friendly reminder, we have got big news hitting in just over 3 hours from now. If you are in the market, please manage your risk. We want everyone here to have their accounts to come back and join us on the Monday, which is when we're going to be back at 8:30 UK time. So if we don't chat before then, have a fantastic weekend. Please manage your risk, and we'll catch you all again on the Monday, 8:30. Thanks.